Hello and welcome to the day ahead. It is Wednesday, June the 8th. I'm Andrew Gagan. Well, let's get to it, see what happened overnight. Wall Street moving higher, led by tech and energy, as investors brushed off a second profit warning from Target. And the World Bank swung the axe to its global growth outlook for the year. Taking a closer look into tech, Apple shares were high despite news it will have to change the connector on iPhones sold in Europe by 2024. After the bloc agreed to a single charging port for mobile phones, tablets and cameras. Meanwhile, Target shares taking a beating. Its disappointing margin forecast weighing heavily on the retail sector. This, as it says, it will have to offer further discounts to customers in the second quarter, cancel orders and cut back of stocking discretionary items such as kitchen appliances and televisions as consumer demand weakens. Other retail companies, including Walmart, are reporting a much steeper drop in quarterly profit for May as soaring inflation forces consumers to change their shopping habits. Meantime, Coles Corporation shares jumping on news it's entered exclusive talks with retail store operator Franchise Group. Well, getting to the bigger picture, a stark warning from the World Bank, slashing its global growth forecast for this year by almost a third to 2.9%. As it warned Russia's invasion of Ukraine has compounded the damage from the COVID pandemic and many countries now face recession. World Bank President David Malpass saying global growth could fall to 2.1% in 2022 and 1.5% next year, driving per capita growth close to zero as the bank sees a protracted period of feeble growth and elevated inflation with the risk of stagflation. The bank's warned the outlook could still get worse. Meanwhile, US Treasury Secretary Janet Yellen conceding both her and Federal Reserve Chair Jerome Powell both probably could have used a better term than transitory in describing inflation that they thought would fade quickly. Facing an avalanche of questions, Ms. Yellen reiterated price pressures were too high but hoped increases would soon moderate.
We currently face macroeconomic challenges, including unacceptable levels of inflation, as well as the headwinds associated with the disruptions caused by the pandemic's effect on supply chains and the effects of supply-side disturbances to oil and food markets resulting from Russia's war in Ukraine.
Now, on the data docket overnight, the US trade deficit narrowed in April by 19%, its largely monthly decline on record. Consumer credit growing more than expected, while chain store sales rose more than 12% in the past week compared with a year ago. To the Treasury markets, the US 10-year yield falling by around 6 points to 2.98%, which saw the US dollar come off against other major currencies. The Aussie dollar moving back above 72 US cents. It's currently sitting just below that level. While investors didn't take kindly to the Reserve Bank's interest rate hike yesterday, sentiment is looking more positive today, with ASX futures indicating a strong opening for the local session. And global oil prices rising overnight on supply concerns in Norway and Libya, and on news that the US and Iran have made no progress on a nuclear deal that could potentially allow Iran to pump more oil into global markets. Iron ore futures rose marginally while base metal prices were mostly lower. Spot gold is trading higher on US dollar weakness and lower bond yields. And Bitcoin initially dropping towards 29,000 US dollars before a sharp turnaround saw the price rally, lifting the broader market with it. Well, ahead today, financials will be in focus. NAB is trading ex-dividend, while Westpac becomes the first of the big four to pass on yesterday's 50 basis point hike from the Reserve Bank in full to consumers. It's expected to add some $260 a month to a $1 million mortgage. And that is your day ahead. See you again tomorrow.